Golden Rule Radio is brought to you by McIlvaney ICA. ICA has been helping people take delivery of precious metals and find storage options for decades. They've also helped thousands of investors with their precious metals IRAs. Call ICA today for your free portfolio review at 1-800-525-9556 or download your free report online by clicking the link in the video description to learn how you can double your gold and silver ounces even within an IRA.
Did you say double your ounces? That's what we'll talk about. Welcome back to Golden Rule Radio. This week's highlight, I think, is the platinum price, looking like it's breaking above previous highs. It's well into the 1200s today. And so let's jump right in. Let's start with platinum because platinum is the winner this last week and especially today. Clearly breaking past the previous high. Miles will show it on the charts here. What we want to point out is the divergence that's going on with the platinum price. Platinum price has moved higher quickly in the last couple of months, and the relative strength index, RSI, is showing lower numbers than the previous highs. So there's divergence going on, possibly indicating that a pullback might be due, but I wouldn't be surprised with the momentum that platinum is having to see it just take another few days and head a lot higher. But the divergence is key, and we want to point that out.
Yeah, and I'm glad you bring up the momentum, Robert, because I'm sitting here, we're talking about platinum, but I'm actually looking at the gold chart. Not because I want to talk about gold first, but because I want to talk about what gold did back in June of 2019 when it turned from bearish to bullish, broke above the previous highs through 2015, 16, 17, 18, around that 1375 mark. Also did it with divergence. So I think you bring up a good point. While from a charting technical standpoint, we always look for pullbacks. When you have this type of momentum trend change, it's very likely you could just see platinum stall for a couple of days, couple of weeks, and then continue the new, and I would argue, defined bull market that platinum has already done. So with this breakout above all of the previous bear market highs, I would argue now that platinum is in a bull market just like gold has been for the last couple years and is hot on the heels. So there's no reason whatsoever that we have to see a $300 or $400 or $500 Fibonacci correction in platinum. It certainly could happen. I think that would scare a lot of people out of the market. With me, that would make me salivate personally because we did get bullish confirmation this week. But it is nice to see platinum with a vengeance blowing through some of those tops.
Yeah, I think what you're talking about and pointing out is that gold and silver, when they did that, gold in middle of 2019 and then silver a year later, when they broke out of that sideways channel, they didn't come back down. So if platinum is going to behave and follow that trend, just lagging gold and silver, now it's starting to play catch up. It is very possible that platinum does the same thing gold and silver did when they broke out, and it just keeps going up and doesn't look back.
Sure, and what we saw gold do for a while there was continue up. Now, we did have a pretty deep correction back down. Something happened last March with the markets. I can't remember what exactly, or maybe we've talked about it so much I don't want to anymore. But we did eventually have that big correction down in gold where it dropped a few $100. But that was quite a bit higher. The breakout point on gold was at 1370, and it didn't take any semblance of a break till it got up to 1700, 40% higher. So if we see something like that happen in platinum, I do have an upside target where I think you could see some real resistance in the platinum price. Now, we're talking 6-12 months from now, but you're looking somewhere in the low 1500s, which is sort of the last right shoulder, last failed attempt for platinum to continue the bull market back at the middle of 2014. Now that's going to line your fibs up with some pretty good pricing. That's kind of where I'm looking here. So if we see the same kind of pattern, like you said, with gold and silver, where platinum's probably going to stall here up or down 50 or $100 and then just continue to stair step up, it's very likely we could see platinum up another $300 or $400 before we see any type of entry point. And that entry point isn't going to be much lower than where we're at now. So that's definitely one potential, and I think a pretty high likelihood potential scenario for platinum over the next 12 or 18 months.
I've been anxiously awaiting this moment where you technically declare platinum to be in a bull market, so that is great news. And I think for the sake of the listener or a tech novice to go back and say, well, look, if you look at what platinum's done since March of 2020 when it bottomed, March and April, when it got so weak and even sub 600 on the spot price. Why in the world is it not technically in a bull market till right now? Can you go into that for a little bit?
Well, that's a good question, Tori, and I'll jump in here and answer that because I've been charting it here. Platinum price, previous high, I think 2016 high was around 1,200. So as it has come up toward 1,200 and it's blown through that previous high, that has shown a clear shift that it is going above that previous high, 1,200. 1,200 also being a psychological number. So that may give some reason to why we're saying now that there is confirmation platinum has turned bullish. It was somewhat speculation. We had cleared some other previous highs on the charts, and it looked like it wanted to break through this one. But I'm glad to see it clearly breaking through this one. It's not just a pinprick. It's a clear move through that previous 1,200 high, which is also psychological. And so it's turned bullish.
Oh, that's a great answer. Thanks. And I've been telling clients, look, the reason we're adding to platinum in portfolios, one of them is the fact that it's so undervalued versus silver and gold. It also has a ratio relationship. But two is that it was the only one that had yet to break out into a bull market pattern. And so silver, gold, and palladium all already have enjoyed that. And so here we go, and let's hopefully get that chance, like you said, Miles, put your seatbelt on. What about the other metals? Let's jump into gold.
Yeah, that is a lot of information on platinum, considering it makes up a small portion of usually a metals portfolio.
Right.
But there you have it. That's platinum. Jumping to the other metals where there are also some significant changes, especially in that gold-silver ratio. Last week, we saw the gold-silver ratio push to, I think, a 6-year low. And so we want to point that out. We also want to talk specifically and directly to the clients who are listening right now. And we know we have a lot of clients listening to us each week, and we can't talk to you every week on the phone on personal conversations, but we want to tell you there are some things that we see in the metals market, two things specifically. If you're a client listening right now, we want you to call us because we have a few things, calls to action, that are opportunities to take that you may say no. You may want to be waiting a little bit longer for something to happen and materialize a little bit farther, but there have been some changes, and we want to communicate with you on a personal basis, look at your exact portfolio and see where something might make sense because we do have some opportunities, two of them.
Yeah, Robert, and part of those recommendations obviously hinging on what's happening in the gold market right now with gold-silver ratio. And one of the biggest factors in some of these recommendations coming out is the fact that gold continues to be relatively lackluster. You know, we've spent a good number of years on the show discussing the bull market in gold, as gold had its breakout a couple of years ago and has continued to push up. And we have been promising you guys for a number of years that eventually we're going to get to change our tune a little bit and focus more on some of these white metals. I don't know how many times we've said we're going to see the catch up, we're going to see things play out, this is how things happen in bull markets. So the beautiful thing about this particular week, where we're seeing fantastic movement in the platinum price, is it's doing it while gold continues to sit sort of at the bottom end of its declining trading channel. So gold is continuing to compress down and will continue to remain in the short-term bearish market, sort of like we did with platinum on the grander scale, till it proves that we're now in a bull market, or in the case of gold, we're now starting the next leg of the bull market. And with that, gold is, as some of these ratios are starting to compress, starting to look pretty enticing again, even against things like platinum and silver, which have been dramatic recommendations from us in the past.
Yeah, despite all of the spot price lackluster nature, as you describe it, what we are seeing is a pickup in the physical gold demand. And that's obviously leading to some supply issues. Not that we can't get anything right now, but we are seeing premiums climb. So I do want to point out that this is the type of an environment where as you see demand pick up and supply start to get a little tight, gold coins themselves are starting to see premiums climb in a fashion that I haven't seen in all my years here. We've seen it a lot in silver. We're starting to see it in gold. So speaking to the spot price is different than speaking to the demand aspect of the physical ounces.
As we're starting to see silver continue to push against some of the highs it put in last year, back July, August, when we topped out just below $30, and we've seen a little bit of a break above. I think we got a little over 30 here earlier this year. And we're definitely compressing up that direction, and every time it hits it, it loses momentum down. The idea is you keep pushing against the same price level, you're going to consistently take out any standing sell orders on the short side. And just like platinum did today, eventually the defensive line gets tired, and the price pushes right through. And silver to me looks like it's doing the exact same thing. So I wouldn't be surprised to see silver hot on the heels of platinum here in the next couple weeks, which again would continue to push ratios the direction that we've been hoping for a while.
Going again to the supply issues, we are seeing the same sort of dynamic in the premiums in silver as well. I mean, Silver Eagle's up 10% in terms of that premium, and we've been discouraging that. We've got plenty of availability, but far better opportunity in some other silver products. Even big bars are up a couple percent in their premiums. So keep in mind, too, one of the things that we saw occur last Monday with the Wall Street Bets Reddit influence on the silver price, even though it was very short-lived, it did expose the fact that 85% of silver in London is already held by ETFs. So we talked on last week's show about, they were right to try to pinch the product availability, the physical availability. And to their credit, that's also why, coming to the defense of the silver price, big banks and CFTC and CME, they're able to attack the price spike because they were very concerned about the availability of silver. And that availability is far worse than people realize. When you already have 85% of the silver spoken for by ETFs, you're looking at a very looming crisis, in my opinion, in physical silver availability. So the only thing worth mentioning this week on the Dow and the equities markets in general is we're in a runaway bubble right now. And the reason that I can state that is due to Fed credit creation, fiscal stimulus, record manipulation, and really, quite honestly, like an unprecedented lack of regulatory oversight and accountability. That is all adding to this runaway bubble. So I would throw caution out there to our clients. But I would also say, look, be affirmed in your physical precious metals position and the fact that you've taken one, because the debt and spending is not slowing down, it's ramping up. Right? The Biden administration is looking now to use executive action to forgive Americans' federal student debt, right? At least to the tune of $10,000. We've touched on it lightly. Now they're saying it's going to happen. It's going to happen through executive order. $15 minimum wage is coming, right? So keep in mind, the more money that you get in the system, the higher that you get inflation climbing. The CPI will climb. Jeffrey Gundlach did an amazing interview this week, and he stated, look, he doesn't see how we avoid a 3% CPI this year. The last time it even got close to that was 2011. So if that comes, which food's already well above 5, energy's been what's keeping it down. So now you're seeing a reversal in the oil market, and that CPI is going to spike. Here comes inflation. And look at the yield curve on the bond market. Here comes inflation. And oil is telling us the same thing. You realize we were at a gold to oil ratio last March when oil did come down, but we were at 79 to 1. Okay, today we're at 31 to 1. We started the year at 40 to 1, and we're already at a gold to oil ratio of 31 to 1, and that's in a very short period of time. Oil climbing per miles point, gold sitting somewhat stagnant.
Oh, you want to talk about oil? We don't really talk about oil on this show very often, do we?
Not very often.
I think there's some relation there, looking at the gold oil ratio, but also looking at some fundamental factors with oil and in relation to gold. Let's just follow me here for a minute. Central banks bought more gold in 2018 than they had any other year since 1971, when Nixon took the dollar off the gold standard. Record buying. So central banks bought more gold again in 19 than they did 18, which was another record. Well, this last year, 2020, there was a reduction in the accumulation of gold by central banks. Why? Well, one of those factors was Russia. Russia, with the oil price up, they were making money and generating revenue, and they were dumping that revenue not into just sitting in dollars, they were dumping that revenue into buying gold. 2018, 2019, and the beginning of 2020. Well, what happened to the oil price in March? It plummeted. It went down to negative price, right? So Russia's generation of money shrank, and they halted purchases of gold in April 2020. Well, is it any surprise that the gold price peaked a few months later when Russia, a large buyer of gold, stopped getting money from the oil generation of money, stopped putting money into gold? The gold price peaked, this late summer, early fall, and it's traded sideways. China also followed suit and didn't at least report that they were buying gold in 2020. Well, now that the gold price has come down, I'm going to put this little theory out there that that's possibly had a big effect in the gold price. Here we are at a softer gold price by $300 or so from the high. And I would think, now that the oil price is back up to where it started 2020, Russia's making money. They're going to be buying gold again. Whether China reports their buying of gold or not, they're buying gold, especially at $300 discount from the previous high. We're on the verge of another leg higher in the gold price. Now, possibly you try to wash out the low, try to wash it out from here, a very quick move lower. If that happens, you better be buying as much as you can of gold, because the central banks are stepping back in. They probably already are, but if we get a shakeout in the gold price or the metals price, that's the time to buy. If we don't and it starts moving higher, we're going to tell you on the show that it's starting to move higher, but they are ready to be buying again in gold, because last year they had to cool it off from the oil price getting slammed down. So just a theory, but I think it's going to be relevant. We'll talk about it as it goes forward.
Look, if you switched from gold to oil last March and started just holding oil positions, you've just been rewarded with a 50% gain in gold ounces. Talking about a ratio trade. So there you go. And that is a legitimate trade. People follow gold and oil. There's even a trader, the gold and oil guy. So you've got this opportunity to say, look, what side of the fence should I be on in relation to those two commodities? Moving on, in closure, last debt and spending issue, $1.9 trillion stimulus package. It is moving forward. Congress just changed the rules. They no longer need a supermajority. They can just pass this bill on a 51 to 50 with having the tiebreaker voting line, very partisan type of vote that's coming up. But this is going to be the second largest stimulus package in U.S. history, second only to last year's CARES Act, right? So it's not doing anything for the middle class a whole lot in terms of some of the stimulus checks. But the CARES Act added trillions of dollars in fiscal stimulus. We know that, right? In 3 months in 2020 with that, we increased the deficit more than the past 5 recessions combined. In 6 weeks, the Fed bought more treasuries than in 10 years under Bernanke and Yellen. Those are huge, huge numbers. Another $2 trillion, and here we go. And that's just the beginning. They've pledged $2 trillion for clean energy. They've pledged another $1.5 trillion for manufacturing and childcare. Put on your seatbelt. Here it comes. Inflation. 2020 will be the year that inflation was known to have really gotten legs and turned into an all-out jog.
So do you think Russia and China, are they going to buy treasuries instead of gold? Do you think that's possible? Probably not with that abuse.
Probably not, yeah.
Well, that does it this week for Golden Rule Radio. You can follow us on Twitter at ICA Gold, like us on Facebook, McIlvaney Financial, our website, McIlvaney.com. You can always give us a call at 800-525-9556. Thanks for listening. Have a great week.